Curious to know what ETFs are and why there is so much buzz about it? Welcome to the Beginner's Guide to ETFs. Exchange-traded funds, or ETFs, are innovative investment vehicles that offer you a way to access a diverse basket of assets. These funds trade on stock exchanges, much like individual stocks. Recently, they have soared in popularity due to their simplicity and cost-effectiveness in diversifying portfolios. Essentially, ETFs are investment funds that aim to track a particular index, sector, or asset class designed to mirror the performance of their underlying assets. Take, for example, an ETF that tracks the S&P 500 index. It strives to replicate the index's returns by holding the same stocks in the same proportions. Let's delve deeper into the world of ETFs and explore their mechanics, benefits, and the exciting trends shaping their future. So, how are these funds structured and how do they operate? ETFs are structured as open-ended funds, meaning their shares are continuously created and redeemed throughout the trading day. When you buy an ETF share on an exchange, a specialized entity known as an authorized participant, or also called an AP, creates new shares to meet demand. Conversely, when shares are sold, an AP removes those shares from circulation. This creation and redemption process helps ensure that the ETF's price remains closely aligned with the net asset value of its underlying assets. Unlike traditional mutual funds, which are priced once at the end of the trading day, ETFs trade continuously throughout the day, just like stocks. This tax-efficient nature can potentially enhance after-tax returns for investors. What is the difference between ETFs versus stocks? ETFs and individual stocks are distinct investment avenues, each offering unique characteristics and potential benefits. While individual stocks provide ownership in a single company, ETFs offer exposure to a basket of assets, providing instant diversification. This diversification is key to mitigating risk, as the performance of a single stock can significantly impact overall portfolio returns. ETFs spread risk across multiple holdings, reducing the impact of any one company's performance on the overall portfolio. Furthermore, ETFs allow investors to target specific sectors, industries, or investment themes with precision. This granularity enables investors to align their portfolios with their investment convictions and capitalize on emerging trends. Now, let's look at the trends and how ETFs are transforming investment. The ETF industry has witnessed explosive growth and innovation in recent years, transforming the investment landscape and empowering investors with a plethora of options. One notable trend is the rise of thematic ETFs, which focus on specific investment themes such as artificial intelligence, cryptocurrency, cloud computing, or electric vehicles. Another significant development is the emergence of actively managed ETFs. Unlike traditional index tracking ETFs, actively managed ETFs are overseen by portfolio managers who actively select and adjust the fund's holdings based on their market outlook and investment strategies. The ETF industry is also witnessing a surge in environmental, social, and governance (ESG)-focused ETFs. Additionally, fractional shares and zero-commission trading platforms have further lowered the barriers to entry for ETF investors. Industry titans such as BlackRock are shaping the future of ETFs. BlackRock, the world's largest asset manager, stands as a dominant force in the ETF industry, wielding significant influence over its trajectory. With its iShares suite of ETFs, BlackRock offers a comprehensive range of products covering a vast spectrum of asset classes, sectors, and investment strategies. The sheer scale and reach of BlackRock's ETF operations give it unparalleled market power and the ability to shape industry trends. BlackRock's commitment to innovation and product development has been instrumental in expanding the ETF market and catering to evolving investor needs. The firm has been at the forefront of introducing new ETF categories, such as thematic and fixed income ETFs, providing investors with greater choice and flexibility. As the ETF market continues to mature and evolve, BlackRock's influence is likely to remain paramount, shaping the industry's future direction. What lies ahead in the future for ETFs? ETFs have emerged as a cornerstone of modern investment portfolios, offering a compelling blend of diversification, cost-effectiveness, and flexibility. Their ability to provide instant exposure to a basket of assets, track various market segments, and trade with ease has made them increasingly popular among both seasoned and novice investors. ETFs empower individuals to take control of their financial destinies, aligning their investments with their financial goals and risk tolerance. By embracing the principles of diversification, cost awareness, and long-term investing, individuals can harness the power of ETFs to navigate the complexities of the financial markets. The journey towards financial independence starts with informed decision-making, and ETFs provide a valuable tool for investors seeking to build a more prosperous future. Thanks for watching.